I would share my thanks to the UK UE Business Council for putting on this event, for Harriet Watt and for FAB, and particularly for inviting us to speak to you. Our final panel of the day is Cultural and Intergenerational Attitudes to Private Wealth and Sustainable Investment. I should probably also thank all of you for still being here. I know everybody's really busy, and it's been a long day to date, and thank you very much for staying with us so far. My name is Joe Moynihan. I'm the Chief Executive Officer at Jersey Finance. If the accent is confusing you, it's not a Jersey accent. I'm actually Irish, but I'm very proud to promote the beautiful island of Jersey and our world-class financial services industry. We've got a really good expert panel this afternoon who are going to look at some of the risks associated with pivoting private wealth towards more ESG-focused portfolios, definitions, frameworks, and benchmarks. We're going to explore intergenerational and cultural attitudes toward impact and sustainable investment. But before we delve into today's discussions, I'd like to just make a few comments, if I may. The finance industry has for some time referred to the phenomenon known as the Great Wealth Transfer. Now, some estimate, depending on which estimates you hold dear, reckon that between 50 and 70 trillion US dollars will move from baby boomers to Generation X in the next 10 years. And Generation X is defined as those born between 1965 and 1980, which from a personal point of view is a bit of a disappointment because that means I'm excluded from the Great Wealth Transfer. Insights have indicated that 54% of advisors are concerned that they could lose assets when this transfer begins. These concerns hold vital relevance when it comes to sustainable financial investments. And why? Because there is a very clear trend that future generations will have environmental, social, and governance issues front of mind. They are more conscious of the impact of their investment decisions. Women are also significant in this context. Studies have shown that women have a more caring attitude to wealth. Almost 80% of women want to make environmentally responsible investments, compared to 65% of men. And almost 90% of women want to make socially responsible investments, compared to 70% of men. I didn't make these numbers up. These are fact. Also, if we look at the GCC, the transformative phase witnessed in the region towards championing inclusivity and diversity, we're seeing greater participation of women represented in the finance industry. Women constitute a substantial 70% of UAE nationals employed in the banking sector, which boasts one of the highest rates of working Emirati women when compared to other industries in the country. What's more, several women are leading these financial institutions from top positions. For example, Hana Al-Rostami, who heads First Abu Dhabi Bank, Rola Abu Mane, who's the CEO of Standard Chartered UAE, and Huda Al-Lawati, who is the founder and CEO of Alif Capital. So it's very clear that women play an integral and growing role in the UAE's national economy. Returning to the advisory community, the concern for advisors is that new wealth holders will want to do different things with their money from their predecessors. Ultra high net worth and high net worth clients increasingly want their investments to align with their values. And sustainable development goals are growing in popularity to frame discussions between advisors and their clients. Finance industry professionals must ask themselves, am I adequately trained in sustainable finance? Capacity building is critical here. This was mentioned by one of the panels earlier on today, and it's a major challenge for all of us in the financial services sector. Jersey Finance explored this topic recently in some extensive research we did in the region in conjunction with a number of regional partners. The study highlighted the divergence in the perception of next generation readiness regarding the wealth transfer. Understanding and addressing the complexities of perception within family businesses is vital for long-term success. In relation to preparedness and addressing future challenges presented by sustainable finance globally, it is worth highlighting the UN's Financial Centres for Sustainability. As a collective of international finance centres working together to achieve the SDGs and the Paris Agreement, FC4S members are committed to deploying private capital towards sustainable objectives. The network is an invaluable knowledge-sharing platform. Its objectives are essential, particularly when sceptical, loud voices in the media undermine the severity of the environmental, social and governance challenges we face around the globe. Significant momentum is building around changes in reporting and addressing sustainability. Skeptics will be left behind. We have already seen confusion around different disclosure and reporting regimes as they have evolved at different paces, particularly in the US, the EU and the UK. Previous panels have given us some hope that maybe these issues are being addressed. The FC4S, however, reports amongst its members that the average number of sustainable finance policies and regulations is 12% higher than last year. So sustainable finance is not going away. Like it or not, regulations are coming into force around the globe. Alongside this enforcement, however, investor demands are increasing and the environmental problems faced by our planet are exacerbating. It is widely accepted that seeing financial performance and ESG aims as a binary choice is a false dichotomy, again highlighted by one of our panels previously. So the private wealth sector must pay close attention to the future aspirations, demands and challenges of the next generation. And on that note, I would like to invite our panel to join us, please.
My name's Stuart Pryke. I'm a lawyer at Al Tamimi, which is the biggest law firm in the Middle East, and I specialise in family business and private wealth.
My name is Oliver Phillips. I work at Barclays, and I'm the regional head of sustainable finance for the Middle East and Africa. Slightly surprising why I'm here, because I actually sit in the corporate and investment bank, but it will become clear a little bit later where the crossover for some of what I'm doing with our private bank and sort of how we're looking at the opportunities there, and why it makes sense that I am here.
I'm Helen Brand. I'm the Chief Executive of ACCA, a global body for professional accountants, and we have 247,000 fully qualified members globally and over 500,000 future members or students qualifying towards the full professional qualification. I guess it might even be more surprising I'm here because from the accountancy world, but we, of course, on the whole issue around sustainability, capability, capacity building, and the insights I hope I can bring from that 500,000 young people who are studying towards these qualifications and what they believe about sustainability and investment. I hope that might be helpful to our conversation.
So I'm Julian Collin, so I have a tie, so I'm a banker. So I'm in charge of FAB product and services for the private banking.
Hi everyone, I'm Hibel Imara. I'm the Managing Director of Vistra Middle East. Vistra is a global corporate service provider.
Perhaps could you give us some insights as to what the banking and financial sector in the UAE, what you're doing to support and encourage private wealth management and sustainable investing?
I think there is a strong commitment, from the UAE financial sector. As we could see, just a few yesterday, basically, with a commitment of 1 trillion dirham to accelerate sustainable finance, support sustainability, and drive climate action. So financially, there is this commitment, and overall, basically, the sector is obviously very important to drive innovation and to finance the innovations which are needed to support new projects, new sustainability projects in terms of climate transition, wastewater management, and so on. So basically, from a financing perspective, the sector is very key because all those projects will need investments and a lot of investments. For instance, FAB, we have a target of 75 billion of sustainability projects that we want to facilitate by 2030, and it has increased to 135 during COP. We do provide, also on the investment side, various sustainable investment products such as green bonds, green bond financings, which are very key, basically, to allocate funds into this kind of projects, sustainable investment funds, and but also green mortgages, sustainable linked loan. So basically, the space for product into sustainable investment is very significant, and it's pretty much illimited. And the imagination of bankers, as you know, is quite vast. In the portfolio of the clients, you have the usual financial analysis, performance analysis, but at each step you add this layer of ESG integration and ESG screening of the portfolios. Then to come back to what also was mentioned during I think the first panel, I believe the awareness and education of investors is very key. And it's definitely part of the journey. So what we are doing today, I mean, COP obviously, and a lot of banks are doing next gen program to educate basically the next generation into sustainable investment, and they are demanding. I mean, they are, of course, it's something they want to see and they want to have on the shelf. Then again, I mean, I think from a banking perspective, of course, the regulation plays a strong part. And I mean, you have regulation in the UK. I mean, we just from FCA, which is quite interesting actually, which was issued like two days ago, around really anti-greenwashing rules, labeling, and naming, which is very practical, like the UK know how to do, because sometimes the SFDR might be a bit confusing, and basically this anti-greenwashing rule basically is quite key, and a lot of regulators, I mean, in the region as well, I mean, ADGM, the FSA, central bank, are also, I mean, looking at to such kind of new regulation. For the moment, it's more towards reporting, but they are looking into such new anti-greenwashing regulation.
Oliver, would you like to maybe give us an idea why we're seeing so much interest in sustainable investing?
Well, the reason I'm not wearing a tie is I spent all day with climate tech entrepreneurs, so I'd look very out of place. To get into a bit more of the details, and I think it's, we're UK UAE Business Council event, so I think worth looking at the UK and the UAE a little bit, and sort of taking a step back, I think, about how sustainability is growing more broadly. I think in the UK, for me, and I think my colleagues across the bank would agree, it's been quite private sector led actually, and it's almost like the public sector is catching up. Julien, you mentioned the FCA regulations, coming in and starting to sort of catch up. Where actually we've seen private sector saying, let's just go after this. The UAE, it's obviously a little bit different, where we've seen the public sector actually pushing forwards. And the conversations I've had, particularly with, for me, more corporate clients over the last few years, has been that they're getting that push from the government, obviously the shareholder in many cases. And now we're starting to see the private sector companies go, right, well, where can I play a role? How do I support that larger public sector agenda? And that's really driven, I think, this sort of interest in these sustainable products. And I think, bankers really, we don't run out of imagination and different ways to put lipstick on a pig, isn't that the expression? But I think obviously becoming more creative in our responses to what our clients want is effectively what we look to do. And whether that's in the corporate space or in the private wealth space, I think there's a lot that's happening. I think one of the really interesting things, and I think this is more in the Middle East than maybe in the UK, is this sort of intersection between family-owned businesses and the family office. And, where we're seeing families are actually embracing ESG and sustainability into their business, but starting to be a little bit, a bit slower around how they're integrating on their family office. And I think what we're seeing really for that is, and the key difference we're seeing here in the GCC is the sort of difference in sort of the generational wealth aspect. So in the GCC, it tends to be sort of first, maybe second generation wealth. If you look at the UK, for example, you see a lot more that's that older wealth, and it's natural due to the state of the economies and sort of what's been set up. Obviously, not that there isn't first or second generational wealth in the UK, but a slightly different balance from what we see. One example, I like is a client of mine. They're clients of Barclays Private Bank. They're a corporate client, so I won't tell you who they are. But there's actually lots of activity on the corporate level. They're investing in projects. They're building, looking to build and develop projects that are going to be at the forefront of the energy transition, whether that's new transition fuels, whether that's looking at sort of how they embed sustainability into their projects. Talking to my colleagues in the private bank, they're much slower in the family office, and it is because I'm talking to someone who's the second generation of the family, and he's got a very prominent role in the company. It's the elder generation that are more involved in that family office. And we've got some nice data points about this at a report that was produced, I think, at the start of this year, which I'll check the name. It's Investing for Global Impact 2022, ninth year of doing this report. We looked at 150 respondents across 35 countries, and those respondents had an average of $730 million of assets under management. So this is significant financial wealth. And looked at sort of some of the intergenerational stories, and just a couple of stats that I'll throw out for you. So 79% of the people we surveyed said that they were embracing or sort of sustainability into it, and that's in past years that was lower. So we're seeing an increase in more people saying we're looking at this in our investments. Of those, 68% said this was being driven by younger generations. So clearly we can see how that's happening. And 53 said they actually see this as being a bridge between the younger generation. So as they're thinking about that transfer of wealth and transfer of the family business, thinking about, well, actually, how do we get the next gen interested? And I think, as bankers, and I know that my previous bank did this, and I know Barclays does this as well, a lot of focus, as Julien mentioned, on these next gen events. But actually interesting seeing that the families themselves are thinking about this next gen concept and how they use that.
How robustly do you feel that MENA's private clients and families are embracing sustainability and FSG in their approach to building and preserving their wealth?
I think Oliver touched on some really, really key points about the next gen, and I'll probably highlight those again. But just to sort of emphasize, we're sitting in the UAE, in the GCC, and family offices are key stakeholders in all of the objectives that COP is trying to achieve, given that the influence and the power that they have in the region. And certainly from our point of view, we've seen a transition to more responsible investments. There's definitely a shift to reevaluate traditional investments and the way that these are being analysed, and that is definitely being driven by the next gen, who are much more conscious. And I think they're much more engaged in the investment decision-making process. There's a desire, particularly, at least with the families that we speak with in the last 3 to 5 years, of alignment, aligning family values with ESG goals, and that's crucial for long-term success. And so what we see in reality when we look at the family's governance and structuring and preservation of wealth, etc., is that this is core to the discussions that we're having, and that critically means that they're looking at strategies, they are questioning the bankers, and that's a good thing. We welcome that, as an industry who are there to support families. And so they are a lot more active in identifying, in evaluating, and then incorporating ESG values with their own values. And then that's all of that then is embedded in the family constitution. So from my point of view, and that from the client base that we speak with, it's heading in the right direction. And I think later we'll discuss some of the challenges actually. So the intention is there. Seeing that intention come to life and measuring the impact that families are having in the region, that's an area of development, but we'll come to discuss that later.
What I'm about to say follows on really from what Heba and Oliver have just said. And I'm going to approach this slightly differently. And rather than just talking about ESG legislation, what I'm going to talk about is what I see as the underlying backdrop you need in order to make legislation work. And so I'm going to set a picture for you, because things are slightly different in the UAE in terms of private wealth than they are in mainland Europe. And the fundamental difference is that private wealth is completely wrapped up with family businesses here in the UAE. And just to give you sort of some idea of the issue here, you've got an economy across the whole of the MENA region. This isn't unique to the UAE, where from the 1980s to now, which is less than a single generation, you've got absolutely enormous economic growth. And all this wealth has fallen into the hands, effectively, of private families. And just to give you a few statistics, so in the UAE, 90% of private businesses are family-owned. They make up 60% of the UAE's GDP, and they provide 80% of the UAE's workforce. So that's how closely connected families are to the entire economy across the MENA region. Now, if you look at the question of stability, and this is my fundamental point, you can write all the ESG laws you like, but if you haven't got a fundamentally stable economy and a stable business sector, then the implementation of all these laws will be a difficult thing to achieve in a meaningful way. So the two things, to my mind, go together. And here's a few more statistics, and I hope this will explain why this is such an important issue in my mind. So the statistics are that in terms of, at the moment anyway, the number of businesses that are in first generation ownership are 37. This is in the UAE, second generation is 47%, and 15% are in the third generation of ownership. And what you see statistically, and this just isn't here, is that the failure rates between first generation to second generation is quite significant, but the failure rate from second generation to third generation is absolutely enormous, and only 13% of businesses survive to the transition to the third generation. So here you've got, if you like, a very critical situation, because you've got a time now where the generations are transiting from one generation to the next, and the risk to a huge sector of the economy is very real. So this is what I see the fundamental issue is, but fortunately the UAE government recognises it too, and so they are in the process and already have started implementing legislation to support family businesses to ensure they don't collapse. And in this way, this will enable working with the ESG regulations, which are here, will enable these things to be implemented. But the point I want to make is that from where I sit anyway, just thinking about ESG regulation and legislation, incredibly important, but you've got to underpin it with a stable backdrop of an economy. That's the point I want to make.
We do a lot of research, and maybe to back up the statistics you were quoting earlier, we do a regular survey of Gen Z, so the people who have just entered or who are about to enter the profession or into the workplace generally. We have 9,000 respondents worldwide, so it was quite in-depth idea of what's going on. I think that's quite interesting in itself that we didn't see marked difference. What is shaping the minds and ideas of that Gen Z seem to be very similar if we're talking China, Middle East, Africa, Europe. We do find similar results there. Between the generations, it's more markedly different, but Gen Z as a whole would be quite similar across. So they're attaching high importance to learning, career development, job security, mental health, work-life balance, mobility, technology are, the concerns that are coming up very high there. And to go with the theme of the whole week, they're very strongly inclined towards sustainability considerations. So their values, their decision making, they will have a sustainability lens on it. Not simply climate, although that's always the one that people focus on, but certainly social concerns as well. The inclusion element of the way in which societies and economies are moving, incredibly important when Gen Z is making decisions, about the careers they want to pursue, but as consumers, how they're going to spend their money. And that's becoming extremely important to them. So they're looking to work in businesses and organizations and firms and banks that are transparent, that can explain their processes, what it is that they're doing around that sustainability agenda, and ultimately how they choose, if they are part of that wealth, if they have that private wealth, how they choose to use that private wealth is very much based on that. So it doesn't mean that there can be a one-size-fits-all approach to all of this. I think it's absolutely important to understand the context, as you have all been describing, but actually from a generational point of view, very similar considerations. And the point you made earlier about capacity building and enabling that generation to understand how to apply their values in the work environment, incredibly important. So at ACCA, we, for example, here in the Middle East, we've got a certificate in sustainable finance, which we've just translated into Arabic, so that there's that wider access to the understanding of what needs to be done. We've got a climate finance diploma, which we've issued with the CFA Institute, which also, is giving them the tools to actually apply their values in the workplace.
Julian, just come back to you. One of the I guess, just almost picking up on the last comment, what do you think can be done to address greenwashing or indeed skepticism about sustainable finance and the products or services that you're
Sure.
peddling, if you like, for?
Sure. But just before coming to that, just to rebound a bit on what Eba and Ellen mentioned, because I've been based in Europe, I've been based in Asia, and I had different discussion. I mean, with family offices, with families about their wealth and transmission, with respect to ESG. In Europe, it was very E-driven, very around ecological, carbon emission, and so on. In Asia, it was a lot of G. I mean, with a lot of governance issue and really from a risk perspective. And I think in the US, it's very S. It's very gender-centric, diversity-centric. I believe in it. I joined recently, and I've been in the Middle East, I mean, for the past 2-3 months. But from the interaction I have, it's really in between really Europe and Asia, with a lot of E and G. I mean, from a risk perspective with the G, and of course, obviously, with COP, I mean, a lot of discussion around climate change and so on. And it's a lot of the discussion around this. With respect to your question around greenwashing, I think definitely, I mean, what was mentioned during panel 2, I mean, standardization, labeling initiatives are very important in order to not to make some misleading claims with respect to sustainability. Enhanced transparency, of course, accessibility of data and reporting. I think it's very key, and it goes with independent verification. It goes with third-party verification and assurance of the claims, which are done by the various companies in order to give confidence, of course, to the investors. Then you have, the collaboration, which is important between the investor, the regulators, the companies, to share best practice, to share these sustainability standards, which are key. And of course, the regulatory framework, which which definitely play a part, and with potentially anti-greenwashing rules, product labels which are clearer and not misleading, and clear marketing requirements.
Great, thank you very much. I think you made a very good point about sustainability. Sometimes people focus on one of the three letters. When we talk about sustainability in Jersey Finance, we talk about it right across ESG. This is a UAE UK Business Council session. I mean, what opportunities do you see for sustainable investing in terms of the UAE UK connectivity?
What we've sort of seen a lot of is this desire for capital that's been made here to move elsewhere. We see this at the the government level, the national level, with this desire to diversify and the purpose of a lot of the sovereign wealth funds. And it's interesting, we see this as well with people that have made their money in this bit of the world, and they want to then put that money elsewhere. And I think, Stuart, I guess that's sort of some of the statistics you were saying earlier. Maybe that's part of it. The nascency of the business environment, and looking at somewhere a bit more stable to preserve that wealth, if you like. And we really see an appetite for investing in technology that's coming out of the UK in particular. For the private bank, we have our platform that allows people in the UAE, the wider GCC, to access those opportunities, and something that's proved very, very popular. And I promised I would explain why someone from the corporate bank is here. We're now looking at that with what we're doing on the sustainable space. So we have been building as a bank across the entirety of the bank what we call a sort of climate tech escalator. So it's really this sort of, how do we take something from idea all the way to IPO and support those entrepreneurs along that journey, and looking at all of those different avenues of capital that as a bank we have access to. So we start off with those early stage companies. We have our Unreasonable Impact partnership with the Unreasonable Group. We then have a commitment as a bank. This is really unusual for a bank, and part of the thing that attracted me to Barclays. We've committed that by the end of 2027, we'll commit £500 million of our own money and invest that into early stage climate technology companies. Then we have a sustainable and impact banking team. That's that investment banking bit where we're looking at these companies, helping them to raise those last stages of equity, take them to IPO, and then into the broader capital markets. And that's where sort of I've come in and really thinking about the investors in the family offices here in the Middle East. How do we get them into some of these things? Looking at ag tech companies that are working on how do you deliver food security in a region where you don't have rich agricultural lands, looking at innovative sort of energy storage technologies, energy efficiency technologies, and all the rest of it. And we're finding a lot of appetite in that, and a lot of these very exciting companies coming out of the UK, and investors from the UAE looking at, well, how do I get involved in that? And to give an example, on Friday last week, so one of the early COP events that we did was with Dubai Holding, with sovereign wealth funds here, and we had 5 different companies from the UK. Geopura, that are in the green hydrogen space, Zero Avia, that are doing hydrogen electric aviation, Intelligent Growth Solutions up in Scotland, that's looking at vertical farming and building the towers for that, Carbon Clean, which is in the carbon capture space, and then Storega, which is in the carbon storage space. So 5 companies from the UK presenting in the UAE to a range of investors. We had the CEO of our private bank there, and she brought a few clients as well, and really saying this is exactly the sort of thing we want to be seen. So I think a huge opportunity.
The point I made earlier was that in order to have stable governance and to implement all these ESG policies, you have to have a stable family business environment here, which obviously means looking after family businesses. So the UAE government has recognised that, and so they brought in a number of laws. The main one, which came in last year, which was the family business law, which covers family businesses at a federal level, because as you probably know, there are separate areas within the UAE. Some of them are called free zones, which have got their own legislation, and then you've got legislation at a federal level, which covers the whole of the UAE. This was at a federal level, so it covers the main businesses that are local, family businesses, and this law was aimed at essentially trying to ensure that families with these businesses, if they came within this legislative framework, they could pass the business from one generation to the next without problems. So it was introducing the concept of succession ideas to families, and it was also introducing improved governance. And although it didn't say it expressly in the legislation, the implication was you really ought to think about having independent professional directors of your company. And that's just a sort of a very, very small snapshot of it. But the point being that the idea here is to make sure that families, as they because you've got so many, as the generations get bigger and bigger, you've got more and more. It's like a pyramid structure. So you've got more and more people involved in these family businesses as you go through the generations, and somehow you've got to try and manage all the shareholdings and the financial interests without the whole thing turning into a big bun fight. And so this legislation was very well aimed at trying to resolve that. And the other area actually picks up on something that Heber mentioned, which was family office legislation. And that's another area where particularly the free zones of the DIFC and the ADGM, they're enhancing their legislation to encourage families to come into these environments and, if you like, professionalise their services in a protected environment. Again, all about underpinning the stability of family businesses across the UAE, which is, can't emphasise it enough, is incredibly important. And on that platform, that's what you build, and you can implement these important ESG type policies, because you need proper governance to implement that kind of change.
I'm not an investment expert at all, but just a small observation. I think diversifying wealth is critical, regardless of where you are in the world. But what is beautiful to see at the moment is that finally the sovereign wealth funds and the family offices are also investing in the region and the talent in the region, which is just fantastic. And about time that we do more of that. So it's all about allocation and doing that in the correct way. That aside, all families, I think globally, not just in the GCC or the wider MENA region, at the heart of the intention is to do good. And to protect the family brand and the family name, and fundamentally to continue legacy. And so structuring is critical in doing that. And this is all about medium to long-term strategies and objectives, etc. And that needs a lot of expertise and support from us as an industry, not just as corporate service providers, the bankers, the lawyers, the tax advisors, etc., to get together, bearing in mind what their long-term objectives are and what their legacy is in the next decades to come, hopefully, and then embedding that within the family constitution and the structuring. I'll plug Jersey in here because Jersey is a critical jurisdiction, as is the DIFC and ADGM. And I think families in the region and the GCC are getting better at this. They are more open to inviting outside expertise to come in and have the conversations. They're broadening their decision making. We are all good at something. We can't be good at everything. And I think it's great that they're inviting others to the table to have that discussion. I think they are better today at strengthening the role of the board and respecting the roles, and fundamentally communicating. Not something that I think any family is traditionally good at, but I think it's easier to kind of bring that to the table. So setting the tone, which starts with government, naturally. As we mentioned earlier, Stuart touched on it, I touched on it, the others in the panel touched on it. The accountability is critical. And given the influence of the families, it's important that the tone is set from the top. And of course, that then supports a culture of responsibility for many years to come. So next gen leadership, empowering our next gen is important. I think that's in the private wealth world as well as in the corporate world. And then ensuring that that's embedded in the correct structure. I think just one other point on accountability. So, and someone touched on it earlier, when we then have to sit and have these discussions with families and pitch, they are asking us, they are putting us accountable, and I think that is fantastic. And that's on greenwashing as well, and sort of asking the right questions. And by putting us accountable, we're then responsible to ensure that we're not sort of just putting that in theory, but also executing.
I think it's also about the capacity building element and we're seeing that in the region in spades in terms of wanting to invest in the people of the region and giving them the tools and capability to flourish in their own businesses, in their careers, including in the finance profession. So just going back to what we said earlier, in addition to our Gen Z survey, we also have a Gen Z panel, which is hundreds of Gen Zers who give us feedback on absolutely everything to keep us close to the market. So of course, we're tracking legislation, standards, everything that we need to do to equip people, but we're actually listening to their preferences as well and making sure that the educational products and services that we're developing are suitable to them. And yes, the technology piece is absolutely key. And what we inject in there as well, of course, is the ethical dimension. And with the rise of AI and all the other technologies that are going forward, I think marrying the two, the ethical discipline and capacity to make the right judgments with the use of technology is becoming more and more critical. So in addition to the certificates and diplomas I mentioned earlier, our core qualification now, we have sustainability and technology running throughout. And then for those of you, and I think most people in this room probably fall into this category, who are not going to be sitting exams or taking certificates, we provide a lot of reports and insight that cover the areas that enable, I guess, to have that high-level understanding of what is being used. So just in the technology space, just in this year, we've got Digital Horizons, Technology, Innovation and the Future of Accounting, AI in the finance profession, building the foundations for trusted AI, so the ethical component, and then the risk culture, building resilience and seizing opportunity, which again delves into technology. So we have to be constantly kind of re-educating ourselves, assessing what it is that's going on in the marketplace, and then equipping ourselves as businesses and organizations and the individuals to use that technology in the right way.
Great. And given your sort of probably unique view from a macro perspective, how do you think traditional business and traditional profit and loss-led businesses are coping with the demands of the new type of stakeholders?
Yeah, it's very interesting, and from a finance, so this is finance professionals in businesses and the way in which they drive strategy and report on performance. It's all about value in the broadest sense now, beyond the financial. How are you going to embed sustainability in its broadest sense into the organisation? How are you going to equip people there? And so I think what we're seeing is businesses, not just driven by ISSB's new standards or the regulators. It's, as you said, in the UK in particular, but in many other parts of the world, it's been going on for some time. The integration of the financial with the non-financial into your strategy and then into the reporting that goes out to allow investors to make the right decisions.
I would maybe just throw one last question out. I get a really positive feeling from what we've heard from each of you. So maybe you might give us some feedback as to where you feel from a private wealth and sustainable investment piece. Is my positive feeling well-founded, or am I seeing everything through rose-tinted glasses?
I would say it's positive. I think, and actually, because we haven't had time to, I think we all had a few other points to make. But one thing that I was going to end on anyway, which kind of answers this question, and somebody else raised it during this conversation, and it's simply attitude of youth. And this, and I see this in our own firm, which is very international, people from all over the world there. And younger people, they demand home working. They don't want to be using paper. They want to be using their computers. If it can't be done on an iPhone or a computer, it does. It's just not possible. And it's dinosaurs like me who are still printing out bits of paper. And so I'm optimistic, because this isn't to do with government legislation. This is to do with education, and younger people are extremely educated in this. So I think that the fact that I can see it with my own eyes gives me hope for the future, that this generation will drive even harder, and hopefully we all do our part as best we can in that process.
I guess my only concern is, you start looking at some of whether it's the SDGs, which we need to meet by 2030, whether it's the rates of global warming, that reality is we're not going to meet everything. We're going to miss some stuff inevitably. The question is how much, and we need to sort of make sure that people don't get disillusioned and start sort of almost giving up hope. But as long as there is hope, there's a lot to be positive about.
If you look at the next generation, that's where you gain most of your positivity. The one thing I think we really need to strive for globally is consistency, and that comparability of data, information, understanding whether we are making progress or not, and doing that in a consistent way globally is going to be absolutely critical if we're going to reach any of those targets that have been set here at COP.
I think we have a lot of reason to be positive. I mean, the rising interest, coming from the next generation, but also, some senior people are also very into it. The commitment, from a lot of companies, from the banking industry, of course. But, I think we will overcome, this crisis. Because the beauty of human minds and the human, is we can do it, and thanks to innovation. When I look at the pictures, with the MBR solar panels, the wind farms, we have a lot of, and this is just example, we have a lot of options, and thanks to this innovation and the financing which goes behind, I'm sure we will overcome it. Then it's a question of the pace will be at which pace we are able to do it. But there is a lot of reason to be optimistic in my view.
I share the optimism of my fellow panelists, super optimistic and excited, very, very excited. I think for the region specifically, our values and those of, COP and ESG are embedded in religion and culture, etc. I do think we need to get better at measuring all of those stuff. And the region will continue to be a key contributor to, the international community's objectives. I completely agree, Helen, this can't just be in pockets. There's got to be a community shared approach to all of this. And I think the UAE specifically has done, has huge achievements in this area. And I would just end by saying you don't need to be the loudest in the room.
Fantastic. Ladies and gentlemen, I think absolutely superb panel. Thank you very much indeed.